Neo. Neo, the stock to buy in 2025. This stock has been run down to the hill from the sky highs of $60+ crashing down to earth at $4 right now. Is Neo a potential buy for you? Well, in today's episode, you're going to find it all out. Neo was once this company that was flying high, couldn't do anything wrong in terms of people buying into the stock, and then bye-bye. So Neo was a stock I used to hold. I sold out at a loss, 10% I believe. It could have been a lot worse if I obviously stayed in. But Neo for me was one of those spec stocks, and luckily I got out, just like Beyond Meat. Flying the highs, learning the stock market, and then you learn, boom, you don't do it again. But it's a time to look at this company again and maybe take another punt on Neo. That's one of those risk reward plays. Can they be a force again in the EV market? That is the question you got to ask yourself. And there are some positives to Neo, believe it or not, there is some positives. So in today's video, we're going to look at those fundamentals, where that positive is, and see if the stock can improve. Then we're going to look at the financials and nitty gritty, do a stock analysis on that. And then if you stay right to the end of this video, I will give you the intrinsic value of this company, which might shock you, but I've done this video before and the same thing has happened, shocked, but it never comes to reality. And it did come to reality back in the day, but not now. And they continue to be a company that loses all their money. Can they turn it around and be a potential stock to buy? Not financial advice. Do your own research before you invest into any stock. Let's get to it. Let's have a look at what this company has to offer in there. Welcome back, guys and gals, to the channel. Yes, we're going to look at Neo's fundamentals. Can we find a way that stacks it up, that we can go, let's load the boat, potential money-making machine, because it's only made you a little bit in the last 5 years. We'll get to that in the stock analysis. But yep, let's have a look at what's actually the positives for Neo. So one positive for Neo is that they have the technology to swap batteries within a few minutes in world record pace. So they are the leaders when it comes to that. They just nail the change of batteries and consumer relaxation, and that's why we've seen some flying sky high delivery numbers with Neo, and that is certainly something positive about this company. What else are we seeing with obviously addressing range issues is something that obviously Neo is trying to push forward to be the number one there. So if they can find that space, then boom, they go flying up the radar against the rest of the competition. They are trying to sell more affordable cars, trying to get some more money in their coffers to range out to more people. So that is a positive step for Neo. With 72,000 vehicles sold in the last quarter, up 45% year to year. Wowza. Yes, so some very, very important news there for Neo fans out there, and potentially worth having a dig at. Not financial advice. But obviously the weaknesses of there, and what has continued to ruin this company from being a super successful company, is they cannot find profitability, and they're not even in QE of finding profitability, and it's been a long, long journey, and it continues to get worse instead of getting better, and that's why the stock continues to squander at the bottom of the financial heap. Yes, can Neo turn it around? With their last quarter minus over $700 million loss. So that is why this company is struggling, and that's crazy financial numbers there, folks. You're losing over 700 million in a quarter. Whoo-wee. It's not really a company you like to be investing in, I can tell you that much. But can they turn it around? Have they got the talent in their management and their production? Can they find ways to cut costs, to find profitability? If they find all that, then Neo is an absolute standout, is an absolute blowout, 10x opportunity from here. And no doubt about it, there is even the big X's for this company. If you think that it can smash out record producing cars into the future. Well, let's now have a look at a stock analysis of Neo. We're going to look at all the major financial instruments here, see if we can find some positives for you. Well, starting with the 52-week range of $3.61 to $7.71. So in terms of that space, we're at the lower range of that over the last 52 weeks. So that's a positive. But obviously, if you go back 5 years, your stock has only gone up 8%. Congratulations to you if you were involved. Neo's only gone up 8% in the last 5 years. Outstanding. But that doesn't mean you couldn't have made money if you sold at the $60 range and you brought down there. If you brought, some people would be rich right now, and some people would have taken that and taken the money and run. But I'd say 80% of Neo held on and lost a lot of money, and some people still hold on to this day. You know, still have big losses, but expecting it to turn around. And well, if you are in that case, I hope it does turn around for you. Let's have a look at some of these other numbers, folks, to see if it all. So the share price is around $4 at the time of recording. Earnings per share is negative 1.39, so that's no good. So obviously no PE ratio because they're not making any money. Dividends, no dividends. Short interest of 7.2%. I'm surprised it's not higher, to be frankly honest. Market cap 8.5 billion. So the market cap's not the issue, clearly, but return on invested capital is minus 40%. Disaster, disaster, disaster. Yes, they need to find some way in the world to improve that. Shares outstanding of 2.05 billion, so they continue to go up and up and up. It's only been small increments of late, but from 229 million in 2018, they really have skyrocketed, haven't they? Absolutely flowing to the moon. Yes, they've been diluting you, but at least it's improving, and let's hope that goes down going into the future for you Neo fans out there. Negative free cash flow of minus 2 billion. Oh my goodness. Oh my goodness, minus 2 billion, folks. Oh, this is just off the chain. Well, let's see what the revenue side and net loss going here, because it might not get much better. Revenue 8.9 billion from 7.8 billion, so then 7.1 billion the year before that, so they're doing quite well. But negative 3 billion, negative 2.9 billion, it's just not good reading. Not good reading, folks. Continue to lose. If we look at a quarterly basis, they've gone from 1.3 billion to 2.4 billion to 2.6 billion, so that's positive in the revenue. But negative 728, negative 705 million, negative 732 million. Choppy. That is a lot of money to be losing. Lot of money to be losing considering the revenue they're making. They really need to turn that around, and they need to turn it around soon. Total assets 14.8 billion, down from 16.5 billion, so I'm not sure what's happening there, but that's not good. Total liabilities are around the same at 8.18 billion, up from 8.14 billion, so not much of a difference there. So you can read into that what you want, but so overall the figures don't look good, to be honest. Revenue's okay, that's fine, but net profit's not going down. That's the thing. I mean, the net loss is not going down. If they consistently start to go down, people would get excited. But that is the big key, the biggest problem. Everything else from mine, the vehicles look pretty good to me, all that stuff. Obviously trying to get better in terms of their battery range. So there's some work, definitely work to done for Neo. But yeah, it's all about cutting those losses. If they can get that out of the game, they absolutely could be the bargain buy of 2025, because the vehicle range is going up, the deliveries are going up at world record pace for them. But yes, we will see. Well, this is what you came here for, the intrinsic value of Neo right now. Yes, it's probably not too dissimilar to what we've done before in the past, but maybe this time is the time that it might be the right time to buy. Well, we're going to look at a bear case, a base case, optimal case, extraordinary case, and an out of this world, pie in the sky theories. Let's have a look at the intrinsic value. We're going to look at the current share price, earnings per share, growth rate, bond yield to give you an intrinsic value. Yes, so we're going to do $4, just $4 current share price. This is my bear case here of negative 1.29 earnings per share where it's at currently, and 10% growth rate. The current bond yield, you're looking at $41 minus. So that's where the company is right now. That's what it's actually worth right now. Compared to, say, it just gets the profitability at 0.1 earning per share, and we're going to stay at 10% earning growth rate, you're looking at $3. So you're getting near fair value. Not quite, it's still overvalued. But then if it continues to creep up its earnings per share to 0.5 at 10%, then you're looking at 14.9, so a 3x from here. So, wow. You start thinking, interesting. Then if we think it's going to get extraordinary levels, get a 1 earnings per share, 20% growth rate, then you're looking at 50.6. Boom, 10x. This is where you're going to start looking, folks. And then if you think earnings per share is going to go to 2 at 25% growth rate, $122 a share. So, the moral of the story, buy Neo all day. Not financial advice at all. Neo, though, is potential to be a game changer in 5 years' time, or it can make you bankrupt. That's simply the case of Neo here. Currently, it's going to make you bankrupt, but if the turns around, and that's what the key is, folks. Sometimes you don't have to be at the lows of the stock. If the stock starts proving it's improving its profitability and pushing towards profitability like the Teslas and the likes have done in the past, then you invest in, you will make a lot of money. You might not make as much money as people that have held for that long, but then you could be losing money for 2 years, 3 years, 5 years, 10 years, waiting for that to happen. Best time to buy is before the momentum happens, before profitability happens, but you know it's going to profitability. When you see that happening, that's when you buy these sort of stocks and you are more safe. You can buy the stock now and hope for the pie in the sky theories, but if you actually see the numbers happen, it's a good time to start buying with the likes of SoFi, who's in that space right now. They're honest. They have potential stocks that can continue to go up. They might not be flying high stocks, some of them, but Neo can potentially be a flying high stock if they get their act together management-wise. Anyway, that's Neo stock analysis, intrinsic value, and the fundamentals done for you on this channel. Remember to like and subscribe, and I'll be back with plenty more videos just for you.